Good afternoon, and thank you very much for inviting Select Harvest to come and talk to you this afternoon. So, as you've just heard, I'm David Surveyor. I've been here literally since the 20th of February, so I'm very new to industry, and so I've got my learning shoes on, and I'm learning as rapidly as quickly as I possibly can. And I'm joining you really today when we're in the midst of our first half 2023 results roadshow. And so in the sort of 15 minutes or so that are allotted to this session, it's not practical to dive into the detail of our financial results and also try and discuss the conference topic. That said, what I'll try and do is give you a very quick overview of the results for the purpose of giving context to a discussion around sustainable cash growth. Now, for those of you that might have heard our webinar yesterday as we gave our results presentation, I'd like you to think of this session not as being repetitive, but hopefully as being reinforcement of the conversation from yesterday. Now, if anyone would like a more fulsome explanation of any of the slides or our financial results or the business more broadly so, we'd be delighted to provide that to you. If you speak to me afterwards, or if you speak to our CFO, Brett Crump, who's in the audience, as our investor relations leader, Andrew Angus, any one of those can help try and arrange a session to give you some more detail. I think the other thing I should note, it's at one level it might seem strange that a business that is reporting what are currently pretty challenged financial results is being asked to present on sustainable cash growth. But I think in my view, I'd argue it's in fact exactly the opposite of that. It's exactly the moment for a company like Select Harvest to try and have that discussion. We see a sustainable forward growth story in Select Harvest, and I'd like to talk to you about that. This slide, of course, just outlines the basis of preparation of any information, etc., etc. So let's start by basing ourselves in some of the key facts. So clearly, it's a pretty disappointing environment to be standing up as the new managing director and reporting a loss of some $96 million and a negative cash flow position of $27 million for the first 6 months of the 2023 financial year. Now, the results have been materially impacted by weather patterns affecting both the 2022 and the 2023 year, and there are really three drivers. The first of them is that in the first half of this financial year, the company completed a detailed review of its 2022 remaining inventory. And a significant proportion of that inventory had been downgraded or was downgraded due to quality issues, predominantly mould, because there had been a very wet harvest in 2022, and we further wrote off some 1,264 tonnes. So that wet crop inventory impact was some $24 million on the result. Now, that problem was communicated to the market on the 27th of January this year. The second challenge in front of us is a lower 2023 crop, with volumes coming across the weighbridge, combined with a low crack-out rate, has reduced our 2023 crop to 17,500 tonnes. And to give context, we had previously been saying it was going to be a 30,000 tonne harvest. So the net impact of that is $69 million negative. So essentially what happens is you evacuate the revenue, but you do not evacuate much of the cost. Now, the reduced crop really is a result of living in a La Nina weather pattern. That produced record rainfalls, some cold weather and major flooding events across our portfolio prior to harvest. And again, that issue was communicated to the market on the 12th of May. And finally, we have a non-cash impact with goodwill being written off of some $26 million, and that too was also communicated to the marketplace. And it doesn't change the result or excuse it, but our crop performance is pretty much the same as the rest of the Australian almond industry. So the entire industry in Australia this year has had a tough year. Now, one of the reasons for me saying to you those things have been communicated to the marketplace is to highlight that the bad news is actually fundamentally already known and understood by the market. The company's balance sheet remains sound. We've got a net debt to equity ratio of 44%, albeit it's higher than we would perhaps normally like to see. We do have very supportive banking agreements and arrangements. We re-signed a 3-year agreement and saw a $30 million increase in our facility in March of this year. We have a further $20 million available to us up to June 24. And in addition to that, we have a seasonal facility in place that runs for a couple of years that provides a further $20 million. So as at our half-year result on the 31st of March, we had net debt of $189 million against a facility limit of $260 million. So in other words, we've got some headroom. Now, it's also important to remember that our book asset values are less than our market values. So as at the 31st of March 2023, the market value of the company's land was some $129 million higher than book value, and our water assets are some $70 million higher than their reported book values. So when you factor in the market value of our assets, the net asset value of Sleep Harvest is about $6 per share. That's significantly above our current share price. Now, we've of course got work to do and to drive and recover and increase the profit performance of the company as much as possible over the balance of this year and into next year. But clearly, I think this sets the scene for where we are in terms of talking about sustainable growth. And I'll talk about that a bit more as we go through the presentation. So with the scene set, let me now start talking about safety, because people are a critical component to developing and delivering a sustainable organisation. So safety is our most important KPI within the company. Our recordable injury frequency rate continues to head in the right direction. We finished the half year at a frequency rate of 21.2, and today it's at 15.7 injuries per million hours worked. Our injury severity rate has substantially improved with a 35% improvement year on year. Fundamentally, we believe safety events are the result of operational inefficiencies and poor practices. So when you solve a safety hazard or a safety risk, you also solve the business problem. So that's code for safety makes money. So it's an important part of understanding the business model to know that if you improve your safety performance, you make more money for your company. Now, there's no question we have much still to do in terms of achieving our sustainability goal of zero harm, but we're driving a very clear sense of deep and felt leadership across the organisation. We're raising the visibility of safety organisation-wide. We're building better systems. We're building better processes in terms of the way that we run safety. We measure our performance. I think it's really important to note that our focus on safety includes wellbeing. So we recently held a Stop for Wellbeing session across the company. We stopped the entire organisation, all sites, all employees to focus on wellbeing. We further support our people with community service days. We have an employee assistance program which covers psychological, financial and health components, and the increased focus and acceleration that we're making in safety signals the step up in cadence, shift transformation in culture of Select. Now, I think to be a sustainable business, we of course need to be an investable business. So it's worth considering the investment case with the investment logic for Sleep Harvest. We are Australia's second largest, Australia is the second largest almond producer in the world. And Select Harvests is the second largest almond company in Australia. We are a significant global scale almond producer in a positive CAGR industry. Our orchards are rare, they're valuable, and they're long life assets, and they are proven in terms of their geographical growing regions across Australia. Sleep Harvest is also unique, and that's the only publicly listed pure play almond company in the world. You can't easily, quickly, or even economically create a Select Harvest Mark II. In other words, there's a moat around this business. And importantly, we also have a unique proposition for a customer. Not only are we one of the largest almond farmers in the world, that we're fully integrated, meaning that when one of our customers eats a Select Harvest almond, they are safely eating an almond that has been sustainably farmed, hulled, shelled, processed, packed and sold by one company. That almond is fully traceable back to the farm and back to the block which it was produced. And in today's world, that is a very rare and valuable provenance that not many can claim. So the opportunity is to capture value for that unique market position. We've commenced initiatives across the business to increase profit from existing operations, and we're starting to develop new and emerging paths to sustainable growth and cash. One of Select Harvest's sustainability goals is to be a circular business. In practice, that means using all of our farm production to minimise waste and increase efficiency whilst lightening our footprint on the planet. And we're pretty well advanced on this front. We produce approximately 130,000 tonnes per year of biomass from our farms. We aim to put all of that into sustainable use. So in a normal year, we sell about 30,000 tonnes of in-shell and kernel protein, high quality protein, to customers around the globe. The balance of our biomass gets to put to productive use. We put about 60,000 tonnes into animal feed. We use some 10,000 tonnes of hull and shell in our biomass generation facility. That powers our processing plant and nearby farms. We use some 30,000 tonnes of our biomass to create compost, which is then used back on our own farms as fertiliser and also improves soil water holding capacity. We maximise water efficiency, and we do so by using drip irrigation, soil moisture probes and monitoring. We use plant stress technology, phytech, and that measures over time tree trunk width as it expands and contracts with water use requirements. We also apply liquid fertiliser through our irrigation systems to maximise the effectiveness of uptake. And the company further uses high resolution aerial photography to identify inefficiency issues, be they tree canopy stress, overwatering and leakage. And similar to the last presenter, we are starting to explore the possibilities for expanding our circular economy to include using our non-almond productive land for carbon value capture. And we'll talk about that more into the future. Now, it's important to ensure that our sustainability practices are simultaneously supporting the environment and our financial sustainability. So if you look at what we're trying to do to commercialise our biomass, we've already bedded down almond hull to energy generation processes. And in the first half of 2023, we've run a very novel recovery process to increase the energy performance of our plant. And that ensures low cost and efficient energy to power the rest of the facility and of course our neighbouring farms. Select Harvest has also commercialised its own compost using ash from our cogen plant, recycling soil from our farms, using our hull and shell biomass to create a low-cost potassium fertiliser solution. And we're running 2 pilot processes to see if we can commercialise fertiliser from almond hull and fly ash using a patented digestion process. And if successful, that will further improve the circularity and sustainability of the business and create new earning streams for Select Harvest. And given the financial performance of the company's partway through reviewing its strategy and cadence going forward. The working hypothesis that we have for the company has the company really operating over 3 horizons, so horizon 1, 2 and 3. And the strategy path that the company will follow will see us grow our almond volumes, but do so at lower agri risk. It will see us scale up our processing, grow our organisational capability, and balance our farming portfolio with more value-added processing and market-facing investments. Importantly, you'll see a financially disciplined business that's faster to cash, lower on the cost curve, and tightly manages its working capital position and has an analytical approach to considering sustainable investment going forward. Now, as at the time of pulling this presentation together, and it's post half-year balance sheet date, the company has created a project management office and identified a suite of some 28 different projects. 18 of these have been financially valued, and our project management office will drive the execution of these projects. The financial upside for Select is material. In the short term, or in Horizon 1, the company will focus on driving for cash and improving ROIC, focusing on cost reduction, maximising the sales value of our 2023 crop, delivering on our 2024 farming program to ensure that we get the maximum rebound in our crop position, and of course executing the 18 to 28 foundational projects which are aimed at getting the company fit. Horizon 2 is really much more focused on increasing almond supply, expansion of processing capacity and efficiency, such that operational gains immediately flow to the bottom line of the business. We've got a program of capital expenditure and growth opportunities that deliver favourable paybacks and improve the company's financial returns. And you'll see us building out our organisational capability, particularly around strategy, supply chain, sales and marketing capability. Horizon 3 remains in development, but will bring more substantive transformational projects to the fore, and we'll provide some more detail on those as we progress. I think importantly, each initiative is individually tracked, all tracked for profit and cash gains. They're tracked on a weekly basis. We've thus far identified some $20 million in profit upside and some $30 million in cash gain available to the business. And I think that in the short time that we've been working on this, our performance gives us comfort and confidence in the number. Over the last few weeks, we have added some $4 million in profit and $8 million in cash improvement in terms of an annualised run rate that will now flow forward into the business performance. And the other thing that we see is that the speed of sort of project identification gives confidence that there's much more upside available to the company. Now, if we start to turn our focus towards our outlook, and I think despite the impacts of the past couple of years, the company remains well placed to ensure it can operate through the current cycle and become more robust. The global market for almonds is active. It's returned to its pre-COVID levels. Previously high global inventory level balances are decreasing, and the US 23 crop appears to be substantially challenged. There are a range of views on the level of that challenge, but all analysts and all forecasts go to the point that it is well below its last 3-year average. And so we think those factors start to put upward pressure on the pricing environment. Tree health is positive. We've got a forecast weather pattern that's favourable. The chances of moving to a dry El Nino pattern seem higher, and we're developing our own detailed plans and improvement initiatives, and they've started to generate positive returns. Or in other words, we started to set our own destiny. And these things will ensure the company operates effectively within its banking limits without risking future operational performance. So if I start to just bring this to conclusion, the safety performance of the company continues to get better. This is key to keeping the best of people, and the best people are key to performance. There's no doubt 2023 is a difficult year. You certainly get them in agriculture, and we're clearly feeling the impact of 2 poor years in one. But the reality is we will become more robust at managing our business. The farming outlook is positive. The 2023 harvest is being processed with improved product quality over the 2022 crop, and we're expecting a rebound to much more normal levels of crop output in 2024. Market demand for almonds and pricing is moving to more attractive levels, and that bodes well for us. We're operationally focused on cash and costs. We're accelerating the cash-to-cash cycle of the company. We're looking for cost reduction, and a good 2024 crop will quickly generate cash for the business. I think the balance sheet strength of the company has supported the operations through what's been pretty challenging industry conditions, but our bankers are very supportive of the business. As I mentioned, we have 3-year facilities in place. We have sufficient headroom in place to support operations, and our asset values remain well in excess of book values. And finally, we have this program. We have this program for driving growth and return on invested capital. We've got this pipeline of projects that will deliver $20 million of profit, $30 million of cash. There will be more to be discovered and delivered, but the projects are underway and they're delivering. And then we've got this further exploration of step-out opportunities to be pursued. So collectively, we've got a range of programs that will shift the company towards sustainable cash. I think that finishes out my time.
It does.